just like to take a look at the market performance on Friday, because we saw it falling back by just under 0.25%. It seemed that rally that we saw on Wednesday, Thursday running out of steam. Was this just the market closing lower in line with the international markets, or do you think some profit taking ahead of the weekend?
I would opt for the latter. I think I received the news we had been waiting for, which is that the short rains, the October-November rains, will be good according to the weather department, and I think that's a catalyst that the market has been waiting for. So I think that pullback was really short-term, and we are on the cusp of a considerable rally.
Cusp of a considerable rally, which is of course going to be good news for the market, which has been one of the worst performing in the world this year. Apart from those positive sentiments about the rains and the impact that it will have on the economy, which of course has been hit by the drought, what other news could be a positive catalyst for trade this week?
This week, I think we're looking at other macro factors such as inflation and how the currency behaves. In the event that we see the shilling strengthening slightly, then I think that could also have a positive effect on the market, as this is the time to be looking at the Nairobi Stock Exchange, as the macroeconomic picture may just beginning to be changing.
Which is positive news, and of course we had that MPC meeting on Wednesday. What do you think is likely to transpire out of that? Some are saying that we could see an interest rate hike, which will be quite an aggressive stance, given that the fact that it is an unscheduled meeting in the calendar year.
I doubt if there will be an interest rate hike. I think the central bank will have taken cognizance of the fact that the short rains are expected to be good, and therefore we can see the macroeconomic picture improving either in the fourth quarter of this year or the first quarter of next year. So I'm not expecting a very drastic hike in interest rates, if at all.
Let's take a look back at what's taking place with equities and individual stock movements. We saw a rally in Uchumi stock on Friday. That company reporting a 54% drop in profit after tax, hit by a big tax payout for the first 6 months of the year. But if you take a look at profit before tax figures, 514.8 million shillings, a 19% rise there. Sales also increasing 13% to 10.8 billion shillings. Do you think the underlying numbers point to a retailer that is back on a sustainable, profitable footing?
Yes, I think they do. The growth in revenue is particularly of importance and relevance to me. And also, they recorded the highest number of customers per square foot ever in the history of the company. So I think if you look at aspects like same-store sales, which is what analysts tend to look at in an industry such as this one, you'll find that this is a picture of a retailer that's back on its feet. What
is Uchumi doing right now? Of course, it's been able to sort out its debt and realign its balance sheet, but from underlying operations point of view, how is the company managing to generate this 13% rise in sales?
I think it's just basically going back to prudent business principles. We saw that some rash business principles almost brought the chain to its knees. And now what you're seeing is that the company has undergone a rebranding exercise. The company is managing its inventory better. The company is controlling its expansion. And these are some of the prudent business principles that are bringing the company back to its feet.
Now, it appears shareholders will have to wait a little longer to receive a dividend. They haven't received a dividend since 2002, also not being able to benefit from capital gains in the share price, given the fact that it's been suspended since 2006. Now, Uchumi's management has said that they'd rather reinvest profits into regional expansion, consolidating a market share. What do you take of this decision?
I think it's a sound decision. We can see the middle class in East Africa continuing to grow, and more consumers are becoming more and more affluent. Uchumi's competition, such as Nakumat, Naivas, and Tuskys, have undergone considerable branch expansion of their own over the past few years, and are even in countries like Uganda and Tanzania and Rwanda. And I think it's necessary for Uchumi, now that it's getting back to its feet, it's necessary that it plays defense a little bit. But I think the key that Uchumi should be careful about is not to overexpand too quickly, because that's the kind of thing that put the company into trouble a few years back.
I'm sure they will have learned lessons from that. Let's just look at the share price, PE of 5.3. It is trading to a low of 790. Is this a buying opportunity now? Just keep in mind that, of course, it has fallen all the way back down from 13 shillings 25, the price it relisted at end of May.
Yes, I would look at Uchumi as a buy opportunity right now. Like I said, I'm expecting the market to turn any time within the next 3 to 6 months. And also, given that the company seems to be getting back on its feet, the fundamentals are improving, I would say that that's a buy.
Safaricom falling back on Friday, trading ex-dividend, of course, down 4.75% to 3 shillings. There are some concerns now that tariffs will be increased given the high operating costs. Now, the telecom sector, the only sector in the economy that hasn't increased prices as we see inflation surging ahead. Who do you think is likely to be the first telecoms operator to make the move?
I would say probably Airtel. I think we've seen that although they've managed to gain considerable market share, the African operations and some of the other operations have struggled financially. Recently, Airtel increased its tariffs by 20% in India, and therefore would give Airtel probably the most likely to increase its tariffs first.
Going forward, though, what are your expectations for the week's trade? Where do you see the most activity being centered around?
I see the most activity being centered around the banking sector. Like we said, companies like Equity Bank and Coop Bank, the Kenyan banking sector is very defensive. The fundamentals of these banks has not changed. They're still recording double-digit profit growth. However, the decline of the Nairobi Stock Exchange this year means that these banking stocks have become more and more attractive. And then, of course, Kenyan and KPLC, whose full-year results are awaited over the coming month.
Judd, looking in that banking sector, Equity Bank falling back by 30% in 2011. Which are your favorite banking stocks? KCB's outperformed the banking sector, but of course that has been a favorite of many investors. We've seen that reflected in the share price.
Yeah, my favorite banking stocks remain Equity Bank, Cooperative Bank, and KCB. You look at the return on equity of these banks. Equity Bank has an ROE of 35%. Coop Bank is right next with 34%. KCB has a return on equity of 22%. You compare these returns on equity with the price to book ratios. Equity Bank is at around 2.5 right now. Coop Bank is trading at 2.4 price to book. And KCB is trading at around 1.4 price to book. So you always have to compare price to book with return on equity. And when you look at the price to book ratios of these companies and compare them with the returns on equity, it seems that they're trading at fairly considerable discounts to their intrinsic value.